So what's it like being on the other side, analyzing other companies rather than running and worrying about your own?
It's a different job, but it's fun. So NFX is an early stage venture fund. We invest in seed stage. So very different scale from the kind of public company that was Trulia, but it's just such a fertile ecosystem right now. And we're seeing, that you kind of think this year is so many IPOs are happening with a basis of network effects. Whether it's Uber, whether it's Airbnb maybe next year, whether it's Lyft, whether it's Zoom with network effects. So our thesis around network effect companies. And so building and investing and finding these great entrepreneurs building network effect companies.
So Trulia merged with Zillow, ultimately, two staunch competitors, not unlike Uber and Lyft. Do you think that they can continue to operate independently?
So for sure. I think there's a massive demand for this service. And I think, frankly, from a regulatory perspective, in the near term, it will be impossible for them to merge. At Trulia and Zillow, we kind of it was a pretty close situation from a regulatory perspective, but it will be impossible now for Uber and Lyft to merge from a antitrust perspective.
So as an investor in Lyft, what's your view on Lyft versus Uber?
So my partner, James Courier, is actually an early angel investor before NFX. So I personally don't have any investment in Lyft or in Uber, but he made an early investment. I spent some time with the Lyft team and spent a little bit of time with the Uber team. I think when you look at the kind of fundamentals, Uber as a larger business is in a more interesting strategic position. Greater scale, greater network effects, greater selection in terms of options for its drivers as well as consumers, and this global reach, which gives us an insight to consumers.
Interestingly, especially coming from the founder point of view, Uber doesn't have as much founder control in part of some of the issues it had with its actual founder. And the CEO doesn't have that kind of control, the current CEO, Dara Khosrowshahi. However, Lyft does. Is that an intriguing proposition from an investor perspective?
So I think it's, there's a perception amongst some investors that founder control is a net negative. But the reality is that this is a long, long, long journey. You look at the future of this industry, it's going to be driven by autonomous. It's not going to be driven by market share this quarter, next quarter. It's going to be driven by autonomous. So the company that gets autonomous right is ultimately going to be an interesting position. And that requires big, big bets. And I think the fear is that, or why investors are quite comfortable with Lyft having founder control, is that they recognize that is the long-term position for the company. So I think, at Trulia, we actually didn't have the founder control of the company, whereas I saw when I joined Zillow's board as post-merger, they did have founder control. And actually that long-term thinking, that kind of pure focus on the consumer was a net benefit to a company like Zillow. So it should help Lyft, I think, in the kind of near term, but they're up against some formidable management. When you look at, obviously SoftBank backing combined with Dara and Barney as the top two folks. These are very experienced executive focused on scale operations, which is somewhat different from the team at Lyft, which are they're awesome guys, but this is a very different rodeo from what they've done before.
Okay, but can they make money, either company? I mean, Lyft is losing half as much money as it makes. Uber is losing billions and billions of dollars. We're just talking about this potential driver strike this week. That's an issue that faces both companies. You talk to any driver, anecdotally, and they complain that they're not making money. They're still doing it, but they complain.
So my Uber this morning was exactly that. He was complaining the prices have gone, his take home has gone down and down and down and down. And yet you look at the financials and they're losing billions. So supply meets demand at the right price. And I think there's so much demand out there. Supply will match that demand at a certain price. And I think when you look at the scale and growth of Lyft, and Uber. So Uber is $11 billion in revenue. Yes, they're losing, billions, but the operating leverage at scale they have will be significant. You've seen internally that, when running Trulia, you look at as you scale, as you're growing so quickly, they are, there's a new management team, there's huge amounts of inefficiencies in there. They will work out those inefficiencies over time and reduce that down. And then long term, with autonomous, I'm confident that they can become profitable businesses.
Okay, so if you were planning to take your company public on Friday and President Trump was planning to raise tariffs on Chinese goods on Friday, how much would you be freaking out about your public debut? in the midst of all of this volatility?
So I remember vividly the pricing discussion where you've got bankers on one side, you've got your board and investors on the other side, you've got management team on the other side, and obviously Lyft, arguably kind of messed up that situation.
Okay, there's two ways to look at that, though, because Lyft got a lot of money for itself. Sure. The price is going down now, which certainly affects sentiment, but now they have all that cash.
Yep, I think arguably they've priced it to perfection, but there's certainly a negative sentiment around that. You've seen the bankers reduce the pricing on the most recent IPOs with Zoom, and certainly with Uber they've done a similar lower pricing. So I think there will be a kind of heated discussion. They're not trying to optimize for they're not going to try and optimize for maximum cash. They'll optimize for momentum. This is a company that's trying to rebuild itself, and they're going to try and create an exciting momentum story out of this.
So at NFX, what are some other opportunities that you're looking at?
So the core thesis around network effects, that's across a range of different categories and strategies. So whether that's real estate companies, whether that's financial services technology, even computational biology, we can see building platform businesses out of that. So a whole range of companies that we think in the next 8 to 10 years, we hope a bunch of them become public as well.